Welcome to Dave Kennon's Retirement Revolution, where this week we're going to answer the question, is the financial news making you a worse investor? So welcome to Dave Kennon's Retirement Revolution. Today we're going to talk about one of my favorite subjects, the financial media. I like beating up on them a little bit. They annoy me at times. A lot of them say and do things that I think are destructive and make things more difficult for people like you when it comes to planning for their retirement and investing their money. So again, today we're going to answer the question, is the financial news making you a worse investor? Interesting. For those of you that are new to the retirement revolution, the retirement revolution is very simple. I am trying to get people in their 60s and 70s to spend more money. Or another way of putting it is I'm trying to get people to stop saving money once they retire. Many people out there, the half of you that have prepared for retirement, that have some money, that have money, that have saved some money in retirement accounts, I'm finding, having done this for 17 years, that a lot of people have a very difficult time spending the money that they had saved specifically for retirement. So the retirement revolution, like I said, is very simple. It's the concept that things are not as bad as sometimes the media makes them out to be when it comes to the financial situation of this world and in the stock market. And people are actually able to spend more money once they retire than they realize. This doesn't apply to everyone. This applies to you. It applies to people that have saved some money for retirement, have prepared, and have done, maybe you saved $200,000, maybe you saved $1 million or $2 million. It doesn't really matter how much you saved. What the retirement revolution is trying to help people do is live a retired life without fear, is try to empower them and give them the tools they need to live their best possible life when they retire. I love this. This is so much fun. This is fun for me. This is not work. I'm not working right now. I'm on a mission. I want to help people. I want to help you. I want to help you live a better retirement. And part of that is kind of filtering out all of this noise. A lot of the work I do is just filtering out the 95% of the financial information that you receive that is completely irrelevant to you and really almost harmful to you. It distracts you from the most important part. So I try to kind of bring you back to the 5% of the information that actually is relevant, that actually is important to you. And today we're going to talk about some of the things that the financial media do to make things more difficult. We're going to talk about the 5 myths the financial media wants you to believe and why you shouldn't. The 5 myths that the financial media wants you to believe and why you shouldn't. So let's jump right in. Let's talk about myth number 1. And when I talk about the financial media, I'm talking about these 24/7 news channels that all they do is talk about financial stuff. I'm not a politically oriented guy. I don't care if you're a Democrat or Republican. All of them annoy me. All of them get me upset. And we're going to talk about, again, the 5 myths that they want you to believe that just aren't true. The first myth is if you don't pay attention to the markets, your investments will suffer. If you don't pay attention to the markets, your investments will suffer. This is not true. This is a lie that has been perpetuated by the financial news media machine. So why does the financial news channel make it sound like it's important to stay on top of things, to know what's going on with the stock market, to know things about individual stocks, to understand technical analysis and fundamental analysis? And why do these channels portray this image that you have to be very vigilant and on top of your financial investments at all times? Well, the answer is pretty simple, and I think deep down inside you know what the answer is. They're trying to sell advertising time, period. I don't want to sound like a conspiracy theorist, but 30 or 40 years ago, there was no such thing as the 24/7 news channel, the financial news channel, and everyone did just fine, right? You do not need to pay attention to your stock and bond portfolio on an hourly basis. let alone a daily basis or even a monthly basis. In fact, by getting too involved and by getting too complicated and by moving things around too much, a lot of the data and a lot of the research shows you end up being worse off, right? If you try to time the markets and move things in and out and be very proactive when you're feeling very responsible and on top of things, well, really, it's not about timing the market, it's about time in the market, right? It's not about timing the market, it's about time in the market. So this concept that if you don't constantly, hyper-vigilantly watch what's going on with the financial news, your portfolio could be adversely affected is just not true. The financial media has to fill airtime, and if they told you the whole truth, it would be a pretty short show. You know, they'd come on the air and they'd say, hey, everybody, so we don't know if the stock market's going to go up or down today. Quite frankly, it doesn't really matter because what we do know is over the long run, stocks and bonds are incredibly powerful tools that have been very successful for a very long time. And that's it. Have a good day. That was our show. Right? If they were being truly honest with themselves, I mean, really, that's what they should be saying. I mean, that's kind of the truth. So myth number one, I hope that myth has been busted. Myth number two that the financial media wants you to believe is you need to listen to these super smart Wall Street guys in order to be a successful investor. Nope, not true. Not true. I've talked about this in my radio program in the past. There is not a super smart Wall Street guy out there that has a magical power to consistently know when the stock market is going to go up or down. Anybody that you see on the financial news, they are guessing, or I guess a nicer way of putting it is they are prognosticating what may or may happen or may not happen in the markets. That's what they're doing. They are guessing. Because if you think about this and take it to its logical extreme, if there was somebody out there that had the magical ability to know exactly when the stock market was going to go down, exactly when the stock market was going to go up, guess what? That guy would be the richest person on the planet. People would be begging him to manage their money. It's never happened. It's never happened. And some people say, well, what about Warren Buffett? Warren Buffett is an investing genius. You go ask Warren Buffett if he knows when the stock market's going to go down or if it's going to go up. He'd tell you the same thing I'm telling you. It's about time in the market. It's not about timing the market. So I just want to take away this myth that has been perpetuated on the financial news that there's somebody out there that has a magic algorithm or some new way of investing that is going to guarantee your success. No, doesn't exist. There's nothing that guarantees anything in this world. I guess death and taxes are guaranteed. But beyond that, nothing is guaranteed. And anybody that you see on the financial news that has an opinion about what direction the markets are going to go, take it with a grain of salt. They don't know. Nobody knows. We're all kind of guessing. But what we do know is that over the long run, their stocks and bonds are incredibly powerful vehicles. And sometimes you just need to get out of your own way. Sometimes you just need to let these markets do what they do, because while they might temporarily go down, they permanently go up. This has been true for 200 years. We have data going for 200 years looking at what stocks and bonds have done, and they have been tremendously successful vehicles to make you more money. That's all I'm saying. Okay, let's talk about myth number 3. Market experts know why the markets go up and down. Now, you hear this all the time. Maybe you're driving home in the car and you're listening to the news and somebody comes on and says, due to a bad employment report today, the stock market went down. Or due to people are nervous about the North Korea situation, the stock market went down. I know this sounds maybe a little counter to what you've thought in the past. Most of the time, nobody knows why the stock market is going up or why it's going down. Most of it can be attributed to human fear and greed. And humans are irrational creatures. And the stock and bond markets are irrational markets because they're controlled by irrational creatures. So nobody really knows why the stock market goes up or down. If there's a traumatic event, if there's like a 9/11 back in 2001 where there's a massive, historic terrorist attack, well then yes, there's a clear indication why the market would go down in that situation. But the vast majority day-to-day kind of stuff, nobody really knows. I mean, they can guess as to why it went up or down, and they might sound smart when they say things like, well, the markets were due to for a pullback because due to my technical analysis here, as you can clearly see on this graph that I've created, due to the PE ratio being lower than it had, blah, 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 blah. We don't know. Nobody really knows. If somebody knew, they'd be really, really wealthy, right? So myth number 3, even when the stock and bond markets do go up and down, we don't really know why. But this isn't bad news. I don't want to give you the impression that any of this is bad news. This is actually, it's just real news. But I also have great news. I have great news. And the great news is stocks and bonds are incredibly powerful. Over the past 100 years, the stock market, as measured by the S&P 500 index, you can't invest directly in an index, but the 500 biggest companies in the U.S. has returned an average of 10%. Bonds over the past 100 years have returned an average of about 6%. That's what they've done, and that's what they do, and that's probably what they're going to keep doing, right? Okay, myth number 4. It is important to continually buy and sell stocks inside your portfolio to maximize returns. Nope, that's a myth. That's not true. Again, the financial media is messing with you here. They're, again, trying to fill airtime. They're giving you the impression that if you really pay attention to these very smart people, you're going to be able to maximize the returns inside your portfolio, when the reality is it might do the opposite of that. Besides the fact that you're trying to do something that's impossible, which is time the market, you also have to, if you start buying and selling, there are costs associated with that, right? When you trade bonds or stocks or mutual funds or whatever it might be, there are costs associated with buying and selling. And there's also tax considerations, right? If this money is invested in a non-retirement account, when you buy and sell like that, you're triggering all kinds of taxes, sometimes short-term capital gains taxes. So again, the myth is it important to continually buy and sell stocks inside your portfolio to maximize returns? No. Myself, this is what I do. I'm a financial advisor. I've done this for 17 years. I help a lot of people with this kind of thing. And as far as what I do, I only make maybe 3 or 4 changes a year, right? We want to rebalance the portfolio. We want to make some minor adjustments. But I'm not sitting there in front of a big computer screen all day. Like, you've seen these pictures where they have like 10 computer screens in front of them. It looks like they're in front of. No, I don't do that. No, that doesn't do anything. I say to people, if there was a better way to do this, we would do it that way. If me day trading stocks somehow helped things, well, then we would do that. But it doesn't, so we don't. Right? It doesn't, so we don't. All right, so myth number 4 is busted. It is not important to continually buy and sell stocks inside your portfolio. I hear people all the time come into my office and say things like, Dave, I like to play around. I like to buy and sell stocks inside my portfolio. And I think to myself, okay, well, while that may work in an up market and while you may get lucky and it may work, I mean, you could get lucky and buy and sell and end up making more money that way. But it's a factor of luck. It's not a factor of skill. There isn't any, as we already talked about, there isn't anybody out there that has a magical algorithm. I don't have a magic secret. Again, what I find is in my job is I just have to filter out a lot of the noise that distracts people from the most important thing, which is creating a long-term diversified portfolio. And when you join the retirement revolution, remember another big part of this is you're going to start spending some of that money, right? That's a big part of the retirement. Speaking of the retirement revolution, I do have classes that I teach in person every month in Sarasota. So if you would like to attend one of my classes, please go to my website. You can go to stoplivingscared.com. That's stoplivingscared.com. And you'll learn a lot. I promise you. You're going to walk away from that class viewing your money in a completely different way. You're going to walk away from that class. I know it's a big promise, but you very well could view your money differently for the rest of your life once you go through the Retirement Revolution class. Once you realize that maybe things aren't quite as complicated or doom and gloom as the media makes it out to be, and with a little bit of planning and a little bit of education, you're going to be okay. You're going to be okay. So I would encourage you to attend. Okay, myth number 5, last one. Financial advisors watch the financial media to get the information they need to help their clients, right? Maybe that's the impression you have. Maybe you think financial advisors if you go to a financial advisor's office, oftentimes you'll see the financial news on the TV. Or if you go into their office, you see the ticker symbol going across the bottom of the TV. It looks very professional, very fancy. We don't watch the financial news to get the information we need to help our clients. We don't. I can't speak for all financial advisors, but all the ones I know, they're not sitting there going, oh, well, that guy just told me, okay, maybe I should make that change for my clients. It just doesn't happen. Again, the channel is trying to give you that impression that this is the place where professionals go to get their information, but we don't. We don't. Again, there's so many other resources out there. There's this thing now called the internet. I'm being kind of sarcastic. There is a tremendous amount of research out there. There's no longer is there such thing as a hot stock tip, right? A hot stock tip, it doesn't happen because the information is so freely available to everyone, and markets are very efficient. When information comes out about various companies and things like that, it very quickly is integrated into the stock price. Anyway, what I'm trying to say is, by the time somebody has an opinion on a financial news channel, it doesn't resonate with me. It doesn't give me any new information. I do not have the financial news on in my lobby. I do not listen to the financial news in my car. I don't. Now, do I understand and research? And, yeah, of course. But I'm not doing it from the 24/7 financial news channels because, as we talked about earlier, they're just trying to sell airtime, advertising time. The more people they can get to watch their show, the more they can charge for advertising. So they're not inherently evil, right? I don't want to give the impression that the media is evil. They're just doing what they're designed to do, which is their enterprise, to make money. And you have to always keep that in mind. And you have to realize that a lot of the effort that these TV stations go through is to create content. How in the world can we fill enough minutes of the day to actually call this a channel? So they have all kinds of people. They have Jim Cramer running around screaming, "Booyah, booyah, booyah." Don't do that. Don't base your financial decisions on that. Maybe it's entertaining to watch that, but at the same time, it does give people the incorrect impression that he has some sort of insider information that nobody else has. In fact, studies have been done that have compared Jim Cramer's recommendations to just investing your money in the 500 biggest companies in the U.S. And guess what? Mr. Cramer is losing. Most of the studies show that his picks have actually done worse than if you just threw your money into the 500 biggest companies in the U.S. I'm sure he's a very nice man. I don't want to say anything negative about him. But again, I just don't want you to have the impression that you're going to get information from these financial media outlets that's going to make you more money. It's just not true. Most of the time, it's just makes things more confusing. Go watch the financial news for an hour and come back and report to me and let me know if you feel any better or if you feel any more educated or if you understand things anymore. I would be shocked if you said you did. I would say, if anything, you're going to come back more confused and a little flustered and maybe a little scared. But we're not living that way, right? You're joining the revolution. The retirement revolution has arrived, and people are already starting in Sarasota. They're doing a little bit of planning, and they're starting to spend an appropriate amount of money out of their retirement accounts on a monthly basis. They are not living scared. They are not dying rich. They are finding the perfect balance between spending too much and too little. And I would encourage you to go, if you're listening to this on iTunes, please, please, please review and rate this radio show. If you could give me 5 stars, if you learned something, I would appreciate it. It helps me tremendously. And even more so is if you leave a review. So if you just type a few words, some kind words ideally, to the iTunes review page, it helps me tremendously to get the word out to more and more people, because I am on a mission. I am on a mission to help people live the lives that they deserve. And a big part of that is helping them retrain their brain to actually, instead of saving and saving and saving your entire life until you die, there is a pivot, there is a point where you stop saving and start spending. And a lot of people wait too long to pivot. If you are 87 years old and you haven't started spending your retirement savings yet, right? What are you going to do? I meet people like this, and they're regretful. They wish they had spent more money earlier in their lives. They waited too long to spend their savings. So that's going to end. Please go to my website, stoplivingscared.com. I hope you learned something today, and be blessed.